Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. How you doing?
We're doing great. Mike, tariff wars continuing to expand across the planet. How is that going to affect the markets and the economy overall?
Well, we're kind of in a pause moment with the tariff war. Of course, last week, Donald Trump announced $30 billion in tariffs on Friday against China, actually implemented them, and China countered. And that did hurt the stock market a little bit. Earlier this week, but today the NASDAQ has made a new high, and a lot of the technology stocks are at all-time highs. Facebook, Amazon, Microsoft, Google, all made new highs today. Activision did too, and it's up 3%. And I'll get back to these stocks in a minute, but to get back with your tariff situation is Trump this week has said he's planning on implementing $200 billion in tariffs. And what happens when they make these announcements is these tariffs don't come into immediate effect. By the end of August, there's going to be a date in which American companies are allowed to present any objections or changes they may want to these tariffs. Of course, this was also the case before, and they were ignored. But we have basically a couple weeks, though, where there's no, tariffs going to be implemented. We're kind of in a tariff quiet period. And then another thing to add about this too, is that China actually only imports or buys from the United States goods worth $130 billion. So there's a $70 million gap between the tariffs, that Trump wants to tax that we're importing from China and what China is getting from us. So we don't know what China is going to do in order to retaliate, if Trump does this, because they can't just do it and match it. They're going to have to find some other mechanism. So we may be into a situation in September where this tariff war really escalates. Maybe China won't be buying as much government debt from the United States as they have in the past, or start boycotting our goods. We don't really know. So the situation could really intensify. However, I want to throw out something that is people need to consider when it comes to this tariff war situation that I really haven't seen mentioned anywhere. And there's 3 reasons Trump could be using these tariffs. And the first reason is one we've actually discussed before, and that is this is popular with his voting base. So yeah, he could be doing the tariffs for his voting base. It increases his popularity with them. The second reason is, he's trying to get Canada and Europe and China now to do what he wants and buy more U.S. exports in the case of China, not steal our technology. And that's really the reason you hear mentioned now in the financial media. And in that sense, over the summer, it's been, these are just threats. In fact, Larry Kudlow, who's Trump's economic advisor, who in his career has been against tariffs. He was appearing on CNBC over the past couple weeks saying these are just threats, that hopefully we won't have tariffs. Then time goes by and we do got tariffs. But this kind of viewpoint also would imply that, look, maybe the tariff war won't really heat up, and maybe the tariffs won't happen, or it won't be as bad as it could be, and other countries will do what Trump wants, and so forth. And in that viewpoint, the argument when it comes to investing is just forget about it and just buy stocks and don't worry about it. And that, frankly, is what people have been doing, and especially doing that today as we speak, as the NASDAQ made a new high. Now, an argument for buying these NASDAQ stocks is, well, these are technology stocks. Tariffs aren't going to impact Facebook or Google, so run into them regardless. However, there's a third reason that Trump, I think, is doing these tariffs that hasn't really gotten into the press. And I'm going to give you a quote by Robert Lighthizer, who is actually the man creating the tariffs for Trump. He works in the Trump administration. Before he was there, he was the personal trade lawyer for Wilbur Ross, who is now Trump's Commerce Secretary. But during the election campaign, Ross was one of Trump's top donors. He's the guy that owns all these steel companies who's benefiting from the tariffs. So Lighthizer is the key guy. And he was quoted last weekend in the Wall Street Journal saying that he doesn't think China's ever going to do what they want, and that he thinks that the tariffs should be kept in place permanently as a mechanism to protect U.S. industry. So he sees this tariffs on steel as something permanent to help Ross out, and tariffs on other U.S. products as permanent too, to help those businesses out. Now, of course, as a whole, corporate America is not going to benefit from these tariffs. The U.S. Commerce Committee opposed them. Individual trade commissions have opposed them, and so forth. In fact, there's talk that a lot of big Republican donors are pulling out of many congressional races because they're against tariffs, and so forth. So I think what Trump is doing could be changing or trying to alter the political economy of the U.S. in order to benefit his donors, and build sort of like a new type of business coalition to support him and candidates like him in the future, so-called America First populist type of candidates. I see it as crony capitalism. But the important takeaway from this would be that, look, this tariff thing is just starting, and people don't realize how serious it is. And it's not just a negotiation or a game Trump is playing against other countries, but something that they see as a way to permanently change the U.S. economy. In that sense, it's not something that's just, a news item for this summer that's kind of disappearing and they're going to reappear in September, but something that is going to go on really for the years to come, or at least for as long as Trump is president. It's going to have a negative impact on the U.S. economy for consumers, not now, not next week, but it's starting probably. It takes time for these tariffs to have an impact, but prices will go up in places like Walmart. The cost for most American companies are going to go up when they have to buy products to build products. For instance, a lot of car manufacturers get products from Canada and Europe and elsewhere and assemble them here. Their costs will go up. That's why Harley Davidson announced they're going to Europe. So this is a policy that will help specific companies that donate to the right politicians, but not the economy as a whole. So it's a crazy situation, but right now the stock market doesn't care, and we're kind of in a party situation where the market has shrugged this off this week. We saw a little bit of a pullback, but we shrugged it off. The leadership is flying back into the FAANG stocks, the 24 or so stocks in the NASDAQ 100 that are going up the most this year, really almost by themselves, pushing the market averages up. The U.S. is the top performing stock market in the whole world, except for Saudi Arabia, year to date, whereas most of the world, or a lot of the world, is actually in a bear market. The emerging market, ETF, EEM, is trading below its 200-day moving average in a vicious bear market. Most of the Asian markets, of course China is, but Japan is, Vietnam is, Korea is, they're all in bear markets. Much of Europe is lagging the U.S. stock market, also near their 200-day moving averages. So what the lay of the markets are that the U.S. stock market is the best performing stock market in the world right now. However, it's really beholden to 24 or so big cap tech stocks, and that's where all the action is. So that's where the robots go when the market shakes some bad news off, like what we saw this week with the tariffs. The hot money once again flows into the 24 tech stocks.
What about unofficial boycotts? Some of my friends have said they've simply given up on buying American products if they can get a Canadian product or a European product, and they don't care if it costs a bit more. They just want to send a message.
Well, I don't know of any data yet that shows what the impact is of Canadians doing that. Of course, there's also stories where Canadians aren't going on as many vacations to the United States either. But this is also a tool that China can use, because when Trump says, I'm going to tax the $200 billion worth of imports across the board 10%, and China can't retaliate in kind with a 10% tax because they're only getting 50 billion or so, they can do the boycott as a way to bridge the gap. So yeah, the boycotts can become a tool used by other countries against the U.S. as a way to fight a tariff war. But in the long run, this really just hurts everybody. There isn't an economist in the United States that I know of who says that the tariffs are going to really help grow the global economy, much less the U.S. economy. I mean, even Larry Kudlow is Trump's top economic advisor, and he is against tariffs on a philosophical basis because of that fact. So it's like, I always fear like the whole world is basically going to be beating our heads against the wall just to benefit, Donald Trump and a couple, of his donors, and that's about it.
We'll have more with Mike Swanson right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's going on in the bond market?
Well, two really interesting things. First of all, the most accurate indicator for forecasting a recession is the yield curve. And what it measures is the short-term interest rate on a bond versus the long-term interest rate on another bond. So if you look at the Treasury bond market, the gap between the 2-year bond and the 10-year bond is 0.3. And I'm going to pull it up right as we're speaking. And a year ago, the gap was 1%. So if you bought a 2-year bond a year ago and then bought a 10-year bond, there was a 1% difference on the yield. Now the difference is less than 0.3. And an inverted yield curve happens when that's negative, when you end up paying more for, or getting more on a short-term yield than you would a long-term yield, which on a common sense basis doesn't seem to make sense. But what that means is that the people in the bond market are predicting that the short-term yields are going to actually come down in the future instead of going up more. They're forecasting a recession when that happens. Now, we're flattening, we're not inverted yet in the United States. However, outside the United States, all the government bonds in aggregate across the world are now inverted. They have an inverted yield curve. That means that the global economy, according to the bond market, is heading into a recession over, I don't know when it's going to begin. It could already be in one, but probably within the next 12 months, it will be in one. And that's probably why most of these world markets are already trading below their 200-day moving averages. The U.S. is probably going to follow the rest of the world into a recession. That seems to be what the flattening yield curve is saying. Now, it's probably not going to start this year. In fact, most economists now are saying it's going to start in 2020. However, the predictions of economists rarely are that accurate, and it could be they're a year off. But I think this is a troubling sign for the long run, and people, and all of us, I think, have to be very aware that we're probably at the very top of the economic cycle in the United States as far as the rate of growth, quarterly GDP growth. This is probably as good as it's going to get. I know how exciting Facebook and Amazon and Google are when they go up, but market tops happen when everything is so exciting and you got a recession coming down the road. And I'm not calling the exact top today. I think we're in an overall topping process. The Dow may have already seen its top in January. Same with the S&P, even though the NASDAQ made a new high. I think we're in a big summer, topping phase that won't be completed until, we break the spring lows, and that might happen in August or September, October, but it's just a process that takes time, even though I know it's so exciting now. And one other thing I'll add about the bond market is today in Reuters, there's a very interesting story saying that at the Federal Reserve, they're split. The Federal Reserve Board members are split on what this flattening yield curve means, and there's half the Federal Reserve Board members are very, very concerned about it, and because it's the most accurate indicator of a coming recession, and they want to find a way to pause the interest rate hikes at some point, maybe one more hike, and start pausing. And then the other half of the Federal Reserve Board members want to keep raising rates and find a way to come up with a new accurate predictor of recessions that's better than the yield curve. So they're searching to do that. So, they're split. And I want to tell you, though, that in 2006, the yield curve inverted and the recession started in the fall of 2007, almost 12 months later. At that time, Ben Bernanke was saying it meant nothing, and he was saying that falling real estate prices wouldn't impact the economy. Of course, he was mistaken on those predictions, and in the summer of 2000, the yield curve inverted. The U.S. economy went into recession, really starting in September of that year. But that summer, Alan Greenspan was saying it meant nothing because of the power of the internet was a revolution somehow that abolished business cycles. And we're not at a inverted yield curve yet, but the world is, and it seems like we're heading that way. So we're in the ninth inning, the way I see it, of the bull market in the stock market and the economic expansion that started in 2009. And we got the first batter, let's say, up to bat. And just like watching a baseball game, you can't predict when the ninth inning comes whether there's going to be 3 batters that come up or 5 or 6. But the game is nearing its end, and you want to be careful in that. If you like to drink alcohol, that means stop drinking. So you're not going to be drunk when you get in the car. You might be able to drink, a couple more beers at the beginning of the game than you would in the ninth inning.
Well, also, if they want to find a new predictor for going into a recession, don't you have to go into a recession to find out what those predictors were?
Yeah, that makes a lot of sense.
We'll have more with Mike Swanson right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, you were the first to bring up during our interviews that we've seen a record amount of buybacks by corporations. They're using the money that they've got back from the tax cuts. Is that a good or bad strategy on their part?
Well, it's interesting. A couple years ago, the Harvard Business School did a study of buybacks. This is like 3 or 4 years ago, and what impact do they actually have on stock prices and the businesses themselves? And they came to the conclusion that they're actually, if you're a short-term investor, they help the stock prices. But if you're a long-term investor for, you're thinking, I'm going to own this stock for years, they actually don't have any real meaningful impact at all. And that would mean that from a long-term investment standpoint, they're basically a waste of money. But if you're focused on the quarterly performance and maybe 6 months or 12 months performance on the stock, then they're great. So, and that's the exact time frame that the CEOs and the board of directors and hedge fund managers and so forth focus on, because they want the quarterly earnings report, the quarterly mutual fund performance, and on and on and on. Now, what I think is going on is this year we've actually seen record stock buybacks in the the second quarter that we just gone through. And I think without them that the U.S. stock market would probably already be in a bear market. Now, there's actually an interesting story in the Wall Street Journal this weekend saying that the impact of the buybacks is actually diminishing on share prices, which I think is a symptom of being in that ninth inning and having such high stock valuations that a year ago they were helping the stocks really shoot up and go crazy. Now they're just helping the market as a whole kind of go up a little bit or remain in place. But the danger sign is that corporations to do these record buybacks, we got the tax cut boom this year, which is a one-off thing, but since really 2013, they started to borrow record amounts of money in the corporate bond market, and that makes it so once the recession really becomes evident that it's here, or the stock market starts to decline, the buybacks will just vanish and they'll stop doing them. And that's what happened in 2007. They vanished overnight around September that year, and the stock market really ran into a very terrible bear market. So I think at some point the same thing will happen again. We're not, at that moment as we're speaking, but I think that is where the future holds, that the buybacks will just stop because companies will get more cautious. And they'll say, we can't just do this. We better, pay off the record junk bond debts we got out there, stop borrowing so much money, and start to conserve our cash reserves. So it's, to me, it helps the stock market. It's probably extended the bull market, but in the long run, it doesn't really do any good unless you are selling into the buybacks and get out before the next bear market comes.
Mike, thank you so much for chatting with us.
Yeah, great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.